We're looking forward to sharing this podcast with you today. I've got here sitting with me Marcus Burton, the mortgage broker. I just realized it's the same initials to start with.
Mortgage broker Marcus
neither
Burton.
here or there. Yeah. But I'm excited to have him on because we're going to go through and discuss something that's actually quite critical and very important, which is the loan process. And oftentimes, even when I'm working with clients, obviously you do this every day, I do this every day. We're aware of the process and the steps. But it's so critical that by the time someone's ready to go look at homes, that they've actually spoken with a lender or a mortgage broker, right?
Correct.
And so there's a process that will help them be on track, be more prepared, be ready to write an offer at the right time.
Correct.
Know where they need to stand. Okay, that's one of my favorite things about getting a buyer in touch with you, for example, is that you can tell them, well, this and this and this needs to be in place. So it saves them time. Obviously, it saves me time. It gives them a runway to know what they need to do to prepare.
Correct.
So that they're finally ready and in the best leverage situation possible to make an offer on the home that they truly want. So with that, and this is a wide funnel, right? That goes on
very
in the loan.
wide. Yeah.
But I think it's important that we go through it and touch on what needs to be done. So right off the bat, what's one of the first steps that you would say?
First of all, I love it when I get a call on a Friday at 6 o'clock and a real estate agent says to me, hey, I need to get somebody pre-qualified.
Oh yeah, that's not sarcastic.
So pre-qualification is pretty simple. I think a lot of times people do it backwards. I think people go find the real estate agent first and then they get pre-qualified, and then you have to hurry things up very quickly. But the process is very simple for pre-qualification. Someone comes to me, I'll have them fill out an application. We'll pull their credit to get their liabilities uploaded. And then we'll basically talk to them a little bit about their finances. Usually a 10 or 15 minute phone call gets things rolling for me. Once I can glean a lot of information off of a phone call, and then that way I can start formulating what type of loan program they're going to qualify for. I think it's so important for people to know from the very beginning that you're going to communicate with them on the pre-qualification process, what you're doing, so they understand the process from the get-go, because it's really important that they understand that.
And I understand, you made a good point, that a lot of times people approach me as the real estate agent or any real estate agent because they think I want to buy a home. It's almost like
find the realtor,
yeah. Right? Which I'm fine with. People reach out and I'll give a referral to, help them line up with a great lender like yourself and a broker at that. And what they sometimes have in their mind is they feel like they're making a commitment, when they go through the pre-qualification process, and they're kind of like, whoa, I'm not quite ready for that.
Yeah.
When in reality, do you want the business? Do I want the business? Of course, but there's really no commitment. This is the best thing you can do for yourself to get that snapshot and to know where you stand, what you can afford, where you need to be. And then you make the decision to go forward or not based on that data. But until that point, you don't have the information you need to be able to make a move.
That's correct. You need to know. And that's funny because every time I talk to someone, they ask a lot of questions and I just keep reverting back to, in order for us to make an intelligent decision, we need to know where you stand. And that's basically pulling your credit, getting income documentation. I think that's really crucial that you communicate with them that throughout the whole process.
Yeah.
Once I've got that stuff figured out, I'll get with my real estate agent, Layne, and I'll say, hey, they're pre-qualified. Here's the loan amount. Here's what they can qualify for. And then they go home shopping. It's virtually that easy in the very beginning once we start that.
So in the next major step, and I obviously, we don't, and we're careful not to treat you like exactly what the next steps are. Okay, we want to be an absolute asset, your friend, your ally, and there is no question you can't ask us through the loan process, in the buying process, that we don't think is not important.
Agreed.
Okay, every question you have,
agreed,
it's critical and it's important, and we're going to try and over communicate and overshare information because you're only making the largest financial decision of your life.
Correct.
For 99% of people.
I agree.
So this is a very serious matter that we want to make sure you're taken care of on. So once we have the pre-qualification letter, okay, they've been approved, or if they haven't been approved, then they know what they need to do. I love how you help them with that as well on getting prepared.
Correct.
So they can be. But let's say they have the letter in hand. We go to make an offer. We have to have that letter. Offer gets accepted. Okay, now what's the next steps in the loan process?
Gosh, you're under contract. It's time to go. So I think from the preliminary pre-approval pre-approval that you get, and once we're ready to go, then we rock and roll. We get the offer. And we submit it to my processor or a processor. She gets everything ready to submit to the underwriter. They're going to ask for more documents because underwriters are not your friend, and underwriters want to make sure that they have every single thing, every piece of information they have. Because if we're submitting, if it's a conventional loan or FHA, we need to make sure that we look at this prior to submitting it, because we want to make sure that we're your advocate, and we want to make sure that we don't give any underwriter any fodder to come back and say, you don't have these documents. We try to submit a complete file to the underwriter. So once it goes and submits to the underwriter, usually within 24 to 48 hours, the underwriter comes back with a conditional pre-approval. That means you're one step further in the process. We order the appraisal at that time. There's a home inspection that sometimes gets ordered. But once the appraisal gets ordered, it's kind of like sit back, wait for the appraisal to come in, gather some more documents that we're going to need. Maybe they request a few more documents from us that we're going to need for the loan process. And once we get those documents, then it goes to the final underwrite.
There's a lot to process there, right?
There's a lot to process in the process.
I think it's important to understand that behind every great lender or broker, there's a processor that is in your corner, along with the lender or broker.
Yep.
Now, keep in mind, on the other end of that is the underwriter, which Marcus touched on, who is looking out for the best interest of the bank.
That's correct.
Who is actually giving you the money to be able to buy the home.
Mm-hmm.
And their job is to pick holes in every bit of your financial information. When the lender or the broker is requesting information, in addition to what you've already submitted, it is not the lender or the broker that's requiring that. It is the underwriter. So don't think that they're not on your side when they keep asking for information. When I go buy a property, I'm a 1099, right?
Mm-hmm.
So I feel like my
you
entire life,
questions.
especially since Dodd-Frank came into existence after the mortgage crisis back in 2008, I mean, they are peeling back every layer of your life. And it's not because Marcus or any other broker or lender is trying to make your life miserable. He's doing what is required. They or she is doing what is required by the underwriter to, as your advocate, to make sure that the loan can go through.
That's correct.
Okay. And these underwriters, unfortunately, and or fortunately, they're faceless, right, through this whole thing. So it's not like we have somebody to get mad at if we can't get an approval, or who keeps asking for more information, and it's set up like that on purpose.
I think it behooves us as loan professionals to kind of arm people for that. Let them know up front that we're doing this because we're trying to fulfill a condition that's a Fannie Mae requirement or a Freddie Mac requirement or an FHA requirement. And I think if you could do a good enough job talking to people about what they can expect, they kind of set the expectation and they really don't get mad at you. I don't have many clients get mad because they have to provide more documents, because I think we do a really good job of explaining that up front, that we're your advocate and this is what we're trying to do to get something done for you.
So he mentioned at the beginning, Marcus, that once you have an accepted contract, which means your signature's on it, the seller's signature's on it, we've agreed to a price, now we step into the escrow period, and obviously you always want to order a home inspection, which isn't the same as the appraisal inspection, right?
No.
Totally separate. That's the one where you kick the tires on the value or what is wrong with the home. Okay?
That's correct.
And then he'll order an appraisal inspection, and the reason that it takes sometimes, I mean, I've seen loans close in 10 days, 35 days. USDA seems to take a little bit longer sometimes, right?
Yes.
Or a VA. But it is not me, it's not the lender, it's the underwriter that is requiring that time in order to get this done. So that's why you do a home inspection with a certified home inspector first, and then we order the appraisal.
Correct.
Right? So what does that bring about? What part in the process? Why is that important?
Well, that's important because the lender has to know what the property is valued at in order to give you the money for the loan. Obviously, they've got to check with that. Sometimes that sellers will price the property higher than, in the last market we had, people were paying over asking price. And a lot of times when it's over asking price or the appraisal comes in low, well, you've got a decision to make whether or not you're going to bring that money to close over and above the appraisal amount, or you're going to negotiate with the seller to drop the price down.
And that's totally market dependent. I mean, 2 years ago, if you didn't come with extra money to the table, guess what? You were probably not going to get that house, and they were going to go to the, one of the other 10 offers that they got. Whereas right now, way more difficult. You don't get as many offers. The seller doesn't. So they're more amenable to being willing to meet you at what the bank views the value of the home truly is at, if the price that was agreed upon is higher than what it's appraised at.
Correct.
Keep in mind, however, that the seller is not required to come down, even if you
Nope.
checkbox that it's dependent upon appraisal. Okay, it doesn't mean they have to come down. They've got to be willing to negotiate, and you'll find out pretty quick if they're overconfident or whatever on what price they can get. But right now, I'm more or less seeing people meeting at the appraised price.
Yeah.
And that will be the amount that's determined, obviously by the appraiser. We don't get to pick the appraiser. I think that's important. That's what led to the last mortgage crisis.
Yeah.
Right there is the crux of it.
One of the reasons.
One of the many reasons. That was
Mm-hmm.
one of them, where appraiser was hired specifically by the buyer, pick their
Mm-hmm.
appraiser to get the price that they wanted, overvalue it, come in with the price, close at the price they agreed upon, get more money out of it. I mean, it was mayhem,
Mm-hmm.
right? And now you can't do that. You can't just bully or push an appraiser around, because it's almost like a rotation of a draft, and who's ever next in line is the one that's going to be the one that does the appraisal.
Appraisal management companies are in control of it all.
So now that the appraisals come in, let's say we're at the
Yeah.
agreed upon price on a home, okay, with the buyer and the seller, what's the next step?
So once we gather all the documents, the appraisals come in, everything is submitted to the underwriter for the final approval. That takes a few days. Once the final approval is done, they'll issue what's called a CTC, a clear to close.
Typically, it seems like a lot of times there's conditions that will come up. And would you say more often than not, or no? The conditions, and what's an example of a condition that would keep the loan from going through that the underwriter's requiring?
Gosh, that's a great question. So sometimes we'll submit bank statements that don't have all the pages, and they'll condition for all the pages, or they'll ask for something that was printed offline, and if it doesn't have the URL in the code or in the screenshot that they sent it over, they're going to want the URL in it. Sometimes there's a discrepancy between what they said and what documents show. They always want to verify.
Or it might be an FHA loan, for example.
Correct.
Which we'll do a separate podcast on, but that might be one of the conditions where they require a handrail on the steps outside of the front of the home that doesn't have one because it's more than 3 steps, right?
That's correct.
So there's little conditions that can come up.
Mm-hmm.
The key is knowing that your interests are aligned with our interests, right?
That's correct.
I mean, neither the real estate agent or the lender is getting paid unless this thing closes.
That's correct.
So we're doing all we can to advocate for you and to make this as simple as possible. Make it so that you're not uptight, we're not uptight. We've seen, granted, every single transaction feels like there's something new that happens in it, but we've seen a lot, and we want to help you, bring this to the finish line. So CTC, or clear to close.
Clear to close, that means we can order the documents. So when the documents get ordered, then we're all going to go sit down at the title company. That's where the third party facilitator.
But now, even before then, there's a step in there that typically will come up, which is the VOE.
Oh yeah, no, that's great. No, we need to touch on that. So I always tell people when we first start the loan process, once we go under contract, don't do anything. Don't open a new line of credit. Don't go buy a new car. Don't quit your job.
And if you do, plan on not buying the house.
Yes, that's correct. Don't plan on getting the house.
You can if you want, but
so at the very end, before they actually fund the loan, we've sat down with the title company, we've signed all the documents. The lender's going to look at it one more time to verify that everything is good, that it's to the penny, all the T's are crossed, all the I's are dotted. The last thing they're going to do is they're going to call your employer, make sure that you're still employed, and they're going to do one more look at your credit, just a soft look to make sure that you haven't opened any. Anytime someone quits a job or opens a new credit, you can blow the whole thing up at the very end of the day. I've had that happen one time in 22 years, and it wasn't a good thing. So I think it's important.
Yeah, and the VOE means verification of employment, which occurs 3 times through the process about?
It occurs 2 times.
2 times. So at the beginning.
At the very beginning.
And then right at the very end.
That's correct. It's funny because people give us their W-2s, their 1099s. We'll do we'll do pay stubs, but we even do a VOE on top of that because lenders don't trust you inherently. They want to make sure that everything lines up. But after Dodd-Frank, the mortgage meltdown, a lot of times it'll come back on the underwriters. That's why they're so stringent and checking these things, because it comes back on the underwriters and the loan officers at this point.
So we come to the closing table in the title company. Everybody signs. You hand over your thousands.
Yeah.
And then you which is settlement, and then actual
Settlement.
closing is when it's the funds transfer, to the seller, right, to the seller's title company, and then it's recorded with the county,
That's
and then
correct.
that's used typically when possession occurs, unless it was negotiated otherwise in the contract with your real estate agent. So that, Marcus, thank you, very insightful,
You're very welcome.
critical.